So good evening, everyone, and welcome to the third episode of YOSI Financial Literacy Webinar. Here we take the finance of both your business and your personal finance. We discuss in detail one topic at a time so that we have detailed discussion and all the pros and cons can be discussed very in detail. So I am Dr. Nilesh Kumar. I am the moderator for the session, and with me will be joining Dr. Rohit Modi, who is the brainchild behind this entire series. He has taken it up under the aegis of YOSI Social Cultural Team. So we thank YOSI Social Cultural Team and the team lead Dr. Nupur Goyal for conceptualizing this and going forward with it, and also the YOSI Governing Council for allowing us to conduct this on a regular basis. So today we have two great speakers. I have known both of them and I have seen them talk. And the first talk will be by Dr. Madan Gopal V. And sir is straight to the point. So he is very, very straight to the point. He calculates what's best ROI is there on your investment. It doesn't matter if it is Indian, it is imported, it is secondhand, but it has to give you a return on your investment. Sir is having his own center. He heads actually two center, one in Salem and one nearby in the name of JBI Hospital. And let's hear him about how to calculate return on investment on each of your purchase. So over to you, sir.
Thanks, Nilesh. I'll just share my screen now. Okay, is it visible?
Yeah.
Great. Okay. Good.
Yes, sir.
Thanks, Nilesh, Dr. Rohit, and the YOSI team for having me here. I've been asked to speak about return on investments in ophthalmic practice. So at the outset, I'd like to thank my parents who are basically business people, and they sowed the seeds of financial literacy really early, and then carrying forward after my marriage. My in-laws are also into a lot of businesses, so I keep learning, and every day is a learning process as far as finance and managing your income or buying something is concerned. So I have to thank them, and I thank Dr. Rohit also for sharing his slides with me, because I remember he spoke about this some time ago, something related to this, and I found that very interesting. So I asked him to share his slides, and he was magnanimous enough to do that. So coming back to my topic, return on investment in ophthalmic practice. There are a lot of variables. There are so many variables, so it cannot be 1 + 1 = 2. It cannot be that simple. But I'll try to simplify things as much as possible and to give an overall overview. At the same time, I'll keep my presentation very short so that we can have a lot of discussion, because I think learning happens when we discuss rather than having a didactic lecture. So yes, as I said, I have a lot of interest in finance, but of course, no financial interest in any of the products that I may be mentioning in this particular presentation. So the best return on investment that I have made so far is probably my calcium clamp, BP handle, and the IC spoon. I was able to take out my investment in the first case itself. But many a time it's not this simple, a lot of variables. So let's go one by one. There are tangibles and intangibles. By saying intangibles, I mean, things that cannot be felt or cannot be directly seen. For example, your happiness or your comfort in operating with a new microscope, or operating in a microscope of your choice, operating in a high-end phaco machine or a high-end vitrectomy machine that you're trained in. So they are intangibles which cannot be brought into, calculating return on your investment. So that is one part of it. And then there are things which give you a direct return. There are things which do not give you a direct return. For example, an OCT machine. It's pretty easy to calculate how much returns it's given you month on month. But let's say you have your air handling unit, or you have your lift, or sit lamp also for that matter. So it doesn't give you any direct return. It's more of an indirect return where you need a combination of equipment to reach a particular outcome. So ROI to calculate for these kind of instruments or equipments, or your interiors also, you'll have to spruce up your interiors a wee bit to increase your turnover. But then what is the ROI on that? You may not be able to calculate it that easily. The other variable is whether you're doing general ophthalmology practice or whether you're doing some kind of specialty practice. For example, my specialty is retina. So the game there is very, very different. But most important of all, I would say, which stage of your career are you in when you're planning an investment? You may be a beginner, or you may be somebody who's already having a base practice. You have a clientele, you have a critical volume. You're looking to expand either into another specialty or into another center. So you have one working for you, and you're thinking of going into another one. Or the third category would be, a large corporate chain. They have their name established in so many places, and so they're coming into another city. That game is completely different. So you're not talking about return on investment. You're talking about growing your brand, providing value, bringing in premium clientele. So I believe for this particular August audience, we're not dealing with that kind of a situation. And I assume we're talking about beginners, or somebody who's got a base practice and who's trying to go to the next level. So often, as a beginner, I have faced this dilemma. I do not buy equipment because I do not have patience, and I do not get patience simply because I do not have equipment. Now, this is kind of a cycle, and we'll have to break it somewhere, somehow. There has to be a skin in the game, because see, we all have trained, all of us. The moment we come out of institutes, we know how confident we are with our surgeries and all. But come on, we'll have to get that monetary benefit. And in order to do that, we will have to put in some money. So without risk, there is no gain. But yes, as a beginner, when we do not have equipment, when we do not have a clientele, it's good to have a cautious approach. Be very, very clear about the risk appetite that you have, and have a clear picture about the financial realities in your family, because that is very important. You cannot jump too far, and learn the language of money as early as possible. I mean, the earlier the better, in your UG days, PG days, on your fellowship days, or it's never too late. At least after coming out, if you really have the entrepreneurial mindset and you want to start out on your own, the first thing we need to know is the language of money. So ROI, to be very, very simple, it is net profit over the cost of investment. But unlike in any other investment, like you say, you have a fixed deposit, or you're investing in the market in direct stocks, or you're investing in mutual fund, where the return on investment, the XIRR or the CAGR is pretty straightforward year on year. But here you are doing your business, you're carrying out your profession, and there are certain things that are very, very important, and without which you simply cannot do anything. So it's good to differentiate between must-haves and good to have. So a basic calculation at the end of a month for any business person would be something like this: the difference between the revenue generated and the expenses for that month is the profit. The difference between the revenue generated at the end of the month and what all expenses we have had is the profit. But oftentimes we fail to discount the equipment that has been the crux to generate the revenue in the first place. So the equipment is what is helping us generate the revenue, and that equipment has a cost, which we often fail to factor into the expenses. So the cost would be depreciation of the equipment and the interest incurred on the capital invested. So that has to come into the expenses, and only then, only after that is taken care of, we can call what we have as the profit. A basic rule of thumb would be to say, 1% of depreciation per month and interest of 1% per month. So if I buy an equipment for a sum of X, and it can give me 2% month on month, I would be doing well. I would be breaking even. I mean, the equipment would have paid for itself in about 48 months, or let's say 4 years. So in 4 years' time, if the equipment can give me 2% of its cost month on month, then I'm doing a good job. So in business parlance, in business terms, if you ask any business person, when you're going for a new equipment, if the machine can pay for itself in 3 to 5 years, it's a good investment. If you can pay it off within 3 years, that's very good. If you have to take more than 6 or 7 years in order to pay it off, then probably it's a dicey investment. And I'll say that with an example. Suppose I have an OCT machine which has costed me, let us say, 20 lakh rupees. So I would have to be making at least 40,000 rupees a month to be breaking even. And since I took up the example of an OCT machine, things are pretty simple. If I say 40 scans a month, taking for 1,000 rupees per eye, then I'm doing a pretty good job. The machine is paying for itself. Mind you, the machine is paying for itself. It's breaking even. I'm not taking anything away. I don't have any profit until this point of time. So another way to look at it is, when you're not talking about equipment, when you're talking about an investment in general, let us say you put in 1 lakh rupees at the interest of 12 to 14% a year. So for 5 years, your expense was 1.70 lakhs. And breaking it down, let's say we work for 250 days a year. The 1 lakh has to be making 140 rupees for us to break even. And then when you take in your AMC, CMC, manpower, electricity, establishment charges, etc., every lakh that we have put into any business should be returning about 200 rupees a day for us to be breaking even, for it to not pinch us in the long run. So let us begin with general ophthalmology. I've just charted out something very, very basic, and this is something which should be essential in order to start generating revenue for anybody who's willing to start an ophthalmic practice. I've also factored in a basic optical establishment, which I would highly recommend anybody starting, that gives you a lot of revenue to begin with. So we're talking about an investment of 50 to 60 lakh rupees for us to get going. And in my previous slide, I mentioned that every lakh has to generate about 200 a day. So this would translate into a cost of about 10,000 a day if we are going for an investment of about 50 lakh rupees, 50 to 60 lakh rupees. You'll have to be making about 10,000 rupees a day, which I'm pretty sure that if you're in the right market, if you're in the right geographical location for your particular skill set, you should be able to generate this in the first 6 to 12 months. And that is a basic fund. And if you're not doing that, probably you'll have to look at your choice of market and the geographic location that you're looking at as a beginner. Again, a lot of disclaimers, but let's say I'm talking about a beginner. Now, this is for a general ophthalmic setup. But when I take my specialty, for example, the costs, the investments are pretty huge. You are talking about the next level not even, I'm not talking about an angiogram machine or an OCT angiography or any high funda stuff. These are the basic things required for a vitrectomy and to get an outcome in retina practice. So that you're talking about 90 lakhs to 1 crore. So again, another thing that needs to be remembered for anybody who's willing to venture into a specialty practice is that as a general rule, suppose, let's say somebody sees 100 OP a day, he has to probably be doing around 10 cataracts a day. And that would probably translate into one surgical VR case a day. So if you would like to do 10 VR cases a day, you have to be seeing 1,000 OP, or to keep it a little more simple, 10 people seeing 100 OP have to be exclusively referring to you. So as a beginner, again, if somebody is starting out, I would strongly encourage them to, get a touch of refraction. Even though he has finished his fellowship in an institute and he's doing pretty well, he knows his stuff, he knows his game. But then start out with general ophthalmology. You know your game. Before, let's say there is no mentor for you, nobody to hold your hands and guide you through the process day in and day out. So start slow. Don't jump in and buy all equipment, because the game is a little different when compared to what was being done in an institute. So you'll get there slowly but surely. You'll get there. But let us not take up a financial burden too early and be bogged down by it. So that is something that I would like to tell everybody. So again, every rupee saved as a beginner is a rupee earned. So we have to also think about refurbished equipment. So there are two ways to look at refurbished equipment. There is a lot of pros and cons. Initially, yes, straight away we start with a 50 to 70% discount when we speak about refurbished equipment. You're talking about less loans, less EMI, less stress. So you have more money in your pocket which you can deploy elsewhere in your personal space or in your professional space. But again, the cons are that dubious people, you'll have to deal with a lot of people. You don't know who is selling what is the real value of the equipment that you're purchasing, has anything been changed. You, of course, cannot claim depreciation on AMC or CMC is more often than not out of the box. And again, there is this joy, there is this intangible of working with a new, fresh equipment. So that cannot be factored into your return on investment. So these are very, very basic points that I have spoken about return on investment. I'd be happy to take questions and keep the discussion going, because I think that will be more beneficial. But one thing that I'd like to say, anybody who's looking out to start, is that there is enough work for all of us. So if you have the entrepreneurial mindset, if you are willing to take risks, then yes, you should step out of your comfort zone and go ahead, start your own practice. Things will follow. Just stay calm. Don't overstretch yourself and put yourself in financial strain early in your career. That is the only thing that I want to say. Thank you. Thank you, Nilesh.
Uh, Hi, thank you, Madan Buchanan, for a wonderful talk. We will go ahead with the discussion later, I believe. Nilesh, what do you think? Only couple of things which I wanted to add was, like he said, 2% per month is a break even what we are looking at. If we are looking at to make a profit, at least we need to target 2.5%, because that 5.5% extra will also help us to pay for the CMC and the AMC of the machine. Next, I'm going to invite Dr. Prakhar Goyal. He's a retired villa surgeon based in Haryana. His knowledge about personal finance and assets finance is quite in depth. Dr. Prakhar, over to you.
Hello.
Hi, Prakhar.
Hi, is my slide visible?
Yes, your slide is visible. You're absolutely audible.
Okay. So yeah, I would like to thank Dr. Rohit and Dr. Nilesh for providing me this opportunity. I don't know if I am, in depth. I have knowledge of finance. I'm still learning. I've now into 3 years into my private practice, and I'm learning all this personal finance. And mind you, it's very, very difficult, and you have to give a lot of time into it. And as a as doctors, we do not have so much of time to put so much time into all these things. So I'll just try and simplify for you a little bit so that some help can be attained from this. So I am no financial expert. These are only my personal views and experience. And yeah, I am a Bania, so some things are obviously there in my genes, which made me do this presentation. Obviously, when we enter into a private practice, we want to be like this, earn as much as possible. We start from somewhere like this, and eventually, yes, everyone is going to become like this. Maybe some will lose hair, some will not. Like me, they will lose hair. But eventually, so everyone will reach to their peak and earn a lot what they want to. The only difference is that a person who's going to reach at that level, how much fast or how much easy will it be for that person to reach at that level will depend upon their financial literacy, will depend upon their personal finance management. Now, personal finance management basically involves three things. The basic principle is first you have to obviously earn money, kamae jao. Then you have to save money. Obviously, yes, penny saved is a penny earned, like what Dr. Madan Gopal said. And then the most important thing, which I believe is invest money, that is lagaye jao. So first kamaye jao, then bachaye jao, and then lagaye jao. Now, in terms of kamaye jao, I will just like to tell you few things that you should always be tracking your income and expenses. And there are a lot of apps from Google Play or Play Store, where you can track your income and expenses. And one of my favorites is Cashbook, which I use actually in my you can manage various books in this, as in your clinic, your home. Then you can add different parties, remarks, categories, modes of payment, and even add images or PDF. And then at the end of the month or at the end of the year, whenever you want, the reports can be generated in Excel or PDF. So this is very helpful to track your income and expenses when it comes, sometimes you just, keep writing, and then at the end of the month, you will actually realize where you have spent, what you have earned. And this gives you a very detailed outlook in that perspective. Another is, this is my own made Excel sheet, which I have made, in which I have actually incorporated everything, wherever I'm earning, wherever I'm spending, and whatever expenditure, and finally, what is the saving, what I'm having at the end of the day, which even includes the amount of money which I've invested. This is just a small slide show kind of thing I'm showing, where I've incorporated everything into this Excel, which includes the earning, the expenses, the personal expenses, which are there in my cash books, and then the analysis, and the final analysis at the end, which actually shows whatever is the income, expenditure, and the investment. So all this thing is in my Excel sheet, and I have a detailed outlook. If it just takes, it doesn't take, it may look big, but it doesn't take much time to fill this Excel sheet once a month, and you have the whole thing at the end of the month. Now, talking about the savings, like we say, a penny saved is a penny earned. Most important part about savings is, first you should have goals and objectives. Goals basically mean ultimate goal, like you want to open this a new clinic, you want to open this new, or you want to buy this space, or want to buy this machine. And for that, there should be small objectives, like specific time defined objectives, where okay, at the end of 3 years I'll be at the end of 1 year I'll be buying this, at the end of 1 year I should have this much money. So those objectives you should have in your mind, and then you should work to on those objectives to finally achieve your goal. You have to allocate your funds allocation in terms of hospital consumables or hospital expenses, then your home expenses, different policies in the terms of cash and bank savings, and then finally invest. We'll come to it later in detail. So one of the things when you're starting your practice, or when you are in the struggling phase, or even later for us banyas, you should always restrict your expenses. I was actually a spendthrift. A lot of people know that I used to spend a lot in my college time, but since the time I have actually started earning, it becomes very difficult to spend. I still remember, every time those lines echo in your mind. Everyone must have heard of that your parents telling you that बेटा जब कमाओगे ना तब पता लगेगा अभी तो तुम खर्चा कर रहे हो. So yeah, you have to restrict your expenses, and actually it comes automatically when you're earning, because you're earning, you're doing a lot of hard work, and you don't just want to be a spendthrift and expend that. Second is, you become your own CA. You have to learn how to save taxes, and a CA maybe do it for you, but you should know what are the things, what do we fall under, what is our professional income. So a little bit I'll just share on this about professional income, that are doctors. As doctors, we fall into section 44 ADA, that is a professional services. This means that if we are generating a receipt of, suppose, 50 lakh rupees a year, then we can show expenses as much as 50%, that is 25 lakhs, and we have the taxable income only 25 lakhs. If we are showing that our expenses are more than 25 lakhs, then we have to get it audited. Otherwise, for 25 lakh of expenses, we don't need an audit. And now we have two kinds of tax slab, which is, one is under old regime and under the new regime. So the basic difference under old regime and new regime is that now the new regime, they have further divided the tax slabs, and there is no deduction under any of the sections. Whereas in under old regime, you have a deduction under a lot of sections. So if I talk about, opting, obviously your CA will be telling you that, but if people who are, having rent, giving home loans, or having a lot of insurances, basically home loans and all, or are opting other tax benefits other than just ATC. ATC is when you can have the tax benefit of 1.5 lakh per year. That is the maximum you can have in ATC. And ATD is your health insurance or any insurance in which you can have up to 25,000. So apart from that, if you are having any other, like, you are giving funds to the political parties, or you are having any home house insurance or home loans, then you should be opting under old regime. But otherwise, new regime is better, and it saves a lot of tax in this. If you see a comparison of tax outflow in old and new regime in a gross salary of 7,50,000 to 30 lakh rupees, you can see that tax under new regime is obviously low than the tax under the old regime when the standard deduction is 1,50,000 what you are opting under the old regime. So these are just the different tax slabs. Now, this is the most important part, that is investing. When you are saving the money, your money sleeps, okay? But if you are working hard, your money also has to work hard to grow. And that is where this investing option comes. And we as doctors are very poor in investing because, we don't have time for that. We don't have knowledge for that. And there are a lot of forums, there are a lot of WhatsApp web chat groups and everything where they are basically talking about investing a lot, because then investment only, when you're investing money, then only the money will grow. Otherwise saving will not give you that kind of return on anything in your long term, because you have to invest to for your future, for your old life, for your kids. Everything is going to happen if you invest your money. Now, there's different types of investments which are there in our country, where we can invest in fixed deposits, which is one of the easiest and safest deposit, and it gives a decent amount of return. But then apart from that, there is gold, then stocks, which is risky. If you have time, if you have knowledge, and if you have that zeal to do, then stocks is one of the best kinds of investment. Then mutual funds is one kind of investment which I would suggest everyone to invest into, because that is the safest investment in my knowledge. Then PPF is one where you can have tax-free investment of 1.5 lakh rupees a year. Apart from that, there are ETFs, NPS, and real estate. So how to choose the right investment plan? First of all, you should know your financial needs. Where do you stand, and what are your needs? What do you want to have at the end of 5 years? Suppose if you have 50 lakh rupees today, at the end of 5 years, what are your financial needs? Then your investment timeline you have to assess. Then strategize with the right investment policies that align with your goals. If your goal is that you have to send your child here to foreign, or if your goal is that you have to make a hospital, so you have to have a right investment policies according to that. Then you analyze your investment plan at certain intervals, keep a track of charges in various investment, and most important, you should invest in multiple financial instruments. That is called as diversification of portfolio, or diversification of your investments. So this was about investments in various forms. Now, when we talk about the particular investment part, one of the most important thing is to have insurances. Now, these insurances can be in the form of health insurance, which is very important. Second is indemnity insurance, which is very important for us doctors. And the third, you can have a term life insurance or an endowment policy. I personally like an endowment policy. An endowment policy is basically a policy in which you basically invest some amount of money that provides you a risk benefit, as in life insurance also, that comes under the tax saving, as in the return which is coming, the interest which is going to come back to you is not is exempted from tax, and it does give a fair amount of returns or an interest. Means most of the endowment policies, if you'll see, they will give you a return of around 7.5 to 8%, which many people who are risky players, what I will say, will not like to have this just 8 to 8.5% of interest. But then it actually covers as an insurance policy also. And in today's life, insurance policy, having an insurance policy with the investment is the best policy for me. That works. Second is investing into mutual funds or SIP, where you invest a amount of money, a fixed amount of money every month, and the investment time should be at least 10 years when you are investing in mutual funds or SIP. The benefits are, there is a disciplined investing because every month you have to spend 15,000 rupees, 20,000 rupees, or whatever amount every month. You can invest online. You don't have to, need people to do that. You can invest with small amounts also, and sometimes in months where you do not have the payments or you're short of money, then you can even skip those SIP payments. Next, yeah, that's why I was telling you that you have to diversify your portfolio according to yeah, have different investment profiles. Diversification basically means owning a wide variety of investments with different characteristics to reduce volatility. Volatility basically means that fluctuations. There are fluctuations if you invest only in stocks. There are so many fluctuations. If you lose money, then you lose a lot of money. If you just invest in gold, if there are fluctuations, then you lose a lot of money. So if you diversify, then you reduce those fluctuations and you reduce those volatility. So if I take my example and talk about managing personal finances, then you have to look about your hospital expenses. Then you have to look about your home expenses. Once those are being taken care of, you have to have one health insurance plan and one endowment plan for sure. Then you invest in mutual funds and SIP. If you're very interested, you can invest in stock market. And this is a season where a lot of initial public offerings or IPOs are coming, and IPOs are a great way of making quick money. But then you have to have a lot of cash in your accounts to apply into that. Gold is one of the things which I don't think is a very good investment if you are investing in mutual funds or SIP, means which they give you a CAGR of at least 14 to 15% in long term minimum, and then cash in hand and your fixed deposits in the bank, which is the safest kind of investment. Apart from that, other expenses which are not taken into account is people who are paying home loan or their rent for clinic or house, or they're paying PDCs for EMIs or machine, or your expenses in terms of advertisements or endorsements for your hospital. They also should be taken in your account. So for an example, if I take an example of an annual income, which is 50 lakhs rupees per year. So 25 lakhs you have on hospital expenses, consumable salary or electricity, and you're now left with a 25 lakh. With 25 lakh and the new tax regime, you are paying a amount of 5 lakh rupees and a home expense of 6 lakh rupees per year. So that boils down to 25 plus 11, 34, and you're left with 16 lakh rupees now. Then I think out of those, you should have a SIP of at least 30,000 rupees per month. That comes to 3 to 4 lakhs rupees per year. Apart from that, PPF is also one forced investment in which you cannot take out your savings for at least 15 years. So, and that is also tax free. The interest which is incurred on PPF is totally tax free. So that is also one good investment where 1.5 lakh per year is a lock-in period of 15 years. Then an endowment insurance somewhere between 2 to 2.5 lakhs years, and then fixed deposit of at least 5 lakhs. Apart, if after that you have money to invest, you can invest in share market, gold or IPO, and then save money for your holidays. Always keep a substantial amount of money for your breakdowns of your machines or any family emergencies or anything like that. And finally, the cash in hand, which is for your day-to-day. So take off messages, always work towards a goal, fulfilling the objectives. Keep your lifestyle in sync with your earning. Learn to become your own CA. Invest as much as possible, and you should always diversify your investment. And don't worry, enjoy life and don't take much of tension.
Thank you, sir. It was really a wonderful talk. I think the last slide where you showed how the breakdown is, that is marvelous. And the best thing to notice about that is you earn, you expend the essential expenditures are there, and then you save, and then you start having your leisure. So that
Right.
is a very subtle point that was very well displayed over here. So, Rohit sir, we will start with Madan sir's topic and discussion, and then we will go to the personal finance.
Sure, definitely. So, Dr. Madan's talk was really wonderful. He, covered a lot of important points when we are investing for a machine, how we need to calculate the return on investment. that is something which is going to be very, very important when we look at the long-term finance. And one thing when I speak to certain other ophthalmologists, what I have learned is first we need to pay ourselves. That is going to be the key part. And well, Dr. Madan Gopalan said it's very difficult to calculate the return on investment on something like air handling unit or the interiors or the OT design cost. What we can do is we can take them all of them together and then keep a 2 to 2.5% return on investment on that. And we can also keep that 2.5% separately invested so that let's say if you are running 2 lakh 10 lakh rupees a month and the hospital interior design with instrument cost was around 1.5 crores, then around 3 lakh rupees or 3.5 lakh rupees a month is going to be the return on investment. And we need to save that money, probably invest in a mutual fund or whatever, or at least mentally we need to know that not exactly what is the return 0.5 because someday we will need to renew the hospital interior, someday we will need to change the air handling unit, or someday we will need to upgrade our OT. So that time this expenses will come into picture. Dr. Manoj sir, your opinion, sir?
Can I make a comment on the Prakhar Goel's talk? I heard it the second half.
Yes,
Am I audible properly?
Yes, sir.
So can I make a comment on that? A few comments on that?
Sir, we will come to that. If you can wait for a few minutes, we'll finish one because there are two different topics. One is from the business and one is for personal. So we will, if it is okay, sir, we will just wait for a few minutes.
Okay, no problem.
Thank you so much, sir. So, Rohit sir, that is one very good point actually, because you don't only just have to calculate ROI on the investment, but also like to see that in future you need to upgrade, repair, and maintenance everything. Everything is so. I think sir has. I'll just. So sir has factored in the maintenance part, AMC part, I think, into his calculation. But the upgrade part, we have to keep some funds aside for that also. But the good thing was there where you showed that for 1 lakh, for every 1 lakh investment, you have to make a ROI of 200 per day to at least break even. So I think we can increase that to around 250 to 250 260 per day, so that you can have some, you can factor in your future upgrades in that. And that way it is very easy to calculate ROI on your interiors also. So if your interior upgrade or your if see what I am doing right now is I am expanding my hospital. A lot of construction work is going on in interiors and all, and this is a good parameter to have, that whatever I am doing, is it increasing my patient workflow? If I am able to see like 5 or 7 patients per day extra, then the investment is worth it. Otherwise, it's just a fancy upgrade that I am doing, and it is not going to make any financial sense. Is it that correct, Madan sir?
Yeah, true.
So interiors.
As far as all our individual ophthalmologists, or at least this audience is concerned, we're looking at the money deployed has to make direct returns. So I don't think we're talking about huge corporate chains where everything is on the book. Like for us, cash is king. At the end of the day, what we carry home matters. We're not talking about increase in our share price, increase in our equity value, bringing in angel investors. All that is not our purview, at least at this point of time. So when we are looking at cash is king, at the end of the day, finish your work, carry your cash home. ROI and the way you mentioned is very, very important.
And sir, one opinion I wanted was on these demo machines. We don't talk about that because they are very less in quantity, and they are up for grabs for a specific period of time. But they fall in between new equipments and refurbished equipments because they're company guaranteed and the AMC CMC is provided by company. So how do you feel and how to grab that chance for the demo machines?
Probably, I think I had a bitter experience with a demo machine, with an OCT machine, which was displayed at a conference, All India conference. They said, "Sir, this is a new machine and all that." But the moment it was delivered here, the good thing is I did not pay upfront. I asked them, whatever it is, keep it as a demo here, and if I'm okay with it, I'll just carry on with it. It had a lot of issues, so we really cannot track where all it's been and what all it's done so far. So my honest opinion would be, you're going for a refurbished one. Okay, fine, go for a refurbished one. Or if you have the cash and you want to deploy it for a new one, better to go for a new one in that manner. That would be better, I think.
Oh, Rohit,
I
sir?
second that.
Digital evidence will have risk management.
Yeah, sir.
Can I start?
Yeah,
Yeah.
yes, yes, sir. Some disturbance
Yeah.
was there.
Yeah, so I agree with Dr. Madan Gopalan. I bought Zeiss demo machine. The initial 6 months when it was under warranty by the company, they did a fantastic service. After that, there were some nagging issues which came. And now, just to make sure that the machine is running smoothly, I'm paying a good amount of CMC to the Zeiss team. Whereas if somebody buys a new machine, then at least for 3 to 4 years, most of the times there are no major repairs cost which is there. And a lot of these company people, when you buy a new machine, they are happy to give you a 2 to 3 year warranty, especially on a OC.
That's true, yes.
Mm.
And if I can chip in, since we are at the topic of discussing whether you buy a new one or you go for refurbished one or something in between. Many VR surgeons starting out, they ask me, "Sir, Constellation is up there, Reticare is down here. What about something in between?" Let's not name companies, but all of us know what we're talking about.
Mm.
I usually tell people, you have the money, go for the top one. If you're very budget conscious, go for the bottom one. Don't get stuck in the middle where
Yeah.
your service backup is also not very great. And if you have a doubt, there are not too many of your colleagues who will be using those machines. So you're neither here nor there. So that is
Yes, sir.
something that can be used as a thumb rule for most things.
And I think instead of going for the higher end, if you don't have the money and taking loan to furnish that, better to go for a lower end machine and save that money and then add on it, and then probably next 3-4 years you upgrade.
Exactly. Yes.
So starting is more important than like getting
Yes.
stuck in the middle.
Keep the show going. Get something.
Yeah.
Keep the show going. Get your foot in the game. Get some skin in the game, and then you know what the game is. From there, we can improvise. We can always, keep changing, doing things. But let's not get stuck in a place where day in and day out, the numbers are always playing in my head where I say, "Oh no, this is my break even. I have to do this. I have to do this." That is where, as Dr. Prakar was saying, we take a lot of tension, and it's not good in the long run.
So yeah, Dr. Madan, very informative talk. Actually, one of the things which I've actually never done is that calculating an ROI, because I've never known how to calculate an ROI. And your talk is very, in that terms, I have my data, I have my income from all my machines and everything. Maybe I can calculate that ROI and then think about it, like which machine is actually giving me a good and like you said, in 3 to 4 years, which machine is going to give me. I'm into starting. I have just started my practice 2.5 years back, so that will be a good idea to see if I'm getting a proper ROI or not. But yeah, apart from that, if you are too much into advertisements and endorsements, that is also one thing where it is very difficult to you know your calculate your ROIs, because you don't know if the footfall is increasing because of that, or if the footfall is increasing because of something else. But then those things are there where you have to spend, you need to spend sometimes, but it's difficult to calculate that are you actually getting any return on that investment or not.
So and ROI calculation gets little tricky because sometimes a machine plays role in like 2 or 3 fields. So taking an example of OCT, I was thinking of upgrading my OCT, and when I was calculating, like per month there are like around 30 or 40 macula scans that I was doing, and it never stuck into my head that I am also doing glaucoma workup, and around 25-30 glaucoma workups are being done every month. So that also will add. So suddenly my OCT income doubled, and then it gave me confidence that okay, I can. So that also we have to take in mind that okay, you have like same machine can do multiple functions, so revenue from all these pockets should come and should be calculated.
No, I would say it's like, learning to drive or something. It's always driving the first time that is difficult. So in my instance, I had a primary center where we fell down, we got up, we did this, we did that. But when we had to expand to a first and a second vision center kind of a thing, we knew exactly where we were. We know which one is going to give us a return. We know this is our blueprint, and in the first 6 months, this is what we'll be doing. This is the amount that goes in. This is what we're expecting, and all that. So when you have your data, your game gets better.
Yeah. So the bottom line is like we have to keep a track of whatever we are earning, and so we will take it to Dr. Prakhar Goyal, who had made that extensive
No, I
chart.
have to commend them for that. Something that is not measured cannot be managed. So
Yeah.
you have to have your cash flow at the end of the day, preferably settle it and then go to bed. That would be the best thing to do. If not, at least weekly, because you need to know where money is coming from and where money is going. That would be the basic financial part.
Perfect, sir. Perfect. Rohit, sir, anything else, or shall we move to Prakhar sir's talk?
Absolutely. Let's do Prakhar.
So that was an excellent talk by Dr. Prakhar sir, and I'm really in awe of that Excel sheet, because I also prepared an Excel sheet and it had, I think, 5 columns. Not more than that. I can't get more detailed than that, but that has given me inspiration to like expand and itemized it. Manoj sir, sorry to stop you in between, sir, but would love to have your comments before we proceed.
No, just a few comments on Dr. Prakhar's talk. See, normally he's suggesting endowment. Yeah, am I audible enough?
Yeah, yes, sir.
Okay.
Absolutely.
Just one comment. One comment was on the endowment plan. See, normally for insurance, we don't suggest endowment at all. If you want life insurance, it should be term plan only, nothing else. The term plan will give you sufficient cover with the cheapest rate, and the balance amount you invest, you will get much more. Any insurance plan you take, never combine insurance with investment. And if you do that, your returns will, on an average, be not more than 6%. Okay, which you will get much more from your mutual funds or wherever you want. So please don't mix up the two. You will get insufficient cover with insufficient returns. That was one thing. Second thing is he showed a. Sorry, I'm commenting on his slides only because I joined a little late. And one was about the where he had sort of 50 lakhs income and then 25 lakhs is your expense. If you're having 50% expense, I think you are in the wrong field then. Okay, your income is 50 lakh gross income, 25 lakhs is your expenses, and then you've got savings, your household income. Your house expense is 6 lakhs only. I think, Prakhar, there's some mistake in that. 50 lakhs income, 25 lakhs is your expenses on your hospital, and 6 lakhs is your own income. I think your wife will kick you out of your home, I think. Okay, you can't have that much. And then you've got savings of ATC, etc. You probably have negative cash flow to spend on your personal expenses. I think there's some error there. Okay. So if your income is 50 lakhs, your expenses on earning 50 lakhs, gross income is 20 lakhs, I think you spend too much money on the equipment then. And I think that should be enough. I think if anything else you want to ask, I can say. Second thing was a comment on like Dr. Madan Gopal. I don't know him, but he was saying that if you want an equipment, probably buy the basic or the top end one. I think you should also look into the cost benefit ratio. If you're buying let's take for example a FECO machine, like a top end machine would be, I think, 50-60 lakhs, and a basic one, maybe Chakshu or Reticare or Upper, would be, let's say, 8 or 10 lakhs. So you're saving 50 lakhs. It's a huge amount of money. Okay, and even if you that means ultimate down the line you want to spend 50 lakhs from your pocket, either you back borrow, steal, or whatever. So you just calculate the basic interest, forget the investment part. It's even if you take 8 or 10%, you are spending 5 lakhs just on the interest component. So think twice before you buy an equipment and high-end machine. You don't really need to do it. Okay, I am probably a very basic, simple man, so I would prefer going for a simple machine, and you will earn much more from that. I operated many places, and I'm using a basic machine to top-end machine. Okay, the difference would be there, but is the difference justifying the cost difference? An example, for example, you can have a basic standard car, or you could buy a Mercedes. So same logic, then why don't you buy a Mercedes? Why have a simple standard car? You get my point? It's the same logic I'm applying to the same thing. So why doesn't everybody buy a Mercedes? Okay, so I think one should think 10 times before you spend a lot of money on these high-end machines or technology. Is it justifying? Are you getting that much extra benefit commensurate with the cost you are spending? I don't think so. I'm sorry, but probably I'm more critical of some of the comments I've heard.
So thank you for the comments, and the critical comments actually make us grow much more and learn much more. Regarding the high-end machines, sir, I think there at certain age and certain expertise, then you can partly fulfill that gap with your expertise. So even with low-end machines, a good surgeon or an expert surgeon can give good results. But when we talk about, I think the average surgeon, then they need aid of machine to give a good result. So that is, I think, one of those intangible parts that we can't calculate. So please.
Can I make a comment again on this?
Yes, yes.
See, the same thing. See, if you have the expertise, like for example, see, I am the senior fellow here, but your society is young people. So if you want to give a message across that you need to buy high-end machines, tell me how many of you can afford to buy a high-end machine at the beginning stage of your life?
Yeah.
First. Second thing is, see, again, the same thing. I am not, Rohit knows me very well. Okay. I am totally for simple technology, simple machines, low end, low tech, which will serve you well in the long run, and you save a lot of money. By the time if you feel that you've earned enough money to buy a high-end machine, that means you've survived very well with a simple technology. Then why do you want to upgrade? See, upgradation is a wrong word. Upgradation is a word which is used to to lull into a feeling that you need to buy, you need to go, you are low grade, you need to buy a Mercedes, you need to buy a top-end Centurion or whatever. Why? If you've been survived, you've done well with your standard practice, with standard technology, then continue with that. Why you want to spend 50-60 lakhs on another thing? In fact, you invest that money and continue the way you are working. As simple as that. What happens is that when you are spending money for the company, the salesman is going to earn money and he'll be laughing behind your back. That eko doctor fasa diya, eko doctor ko bakra banaya, and he's made tons of money. What is doing well? Continue. Why you want to change something when you're doing well? It is foolish. Simple principle in life. Don't fix a barn door when it's not broken. It's doing well. Continue with it. I'm sorry, but I'm a different mold.
Just wanted to add one point. Probably Dr. Prakhar gave that example of 25 lakhs expenses because he was showing that if a doctor comes under presumptive tax, then he needs to show 25 lakhs expenses. And Nilesh, if you're not recording off the record, 25 lakhs expenses can mean a lot of other things also.
No, Rohit, one more comment on this.
Yeah. So, yeah.
Simple thing is, don't hide, pay taxes, have white income, and enjoy life. Don't do that. Please, I'm telling you, in the long run, having more cash, more black income is going to trouble you. Your life will be miserable. Pay tax and have a white income, invest and enjoy. I'm telling you from experience, don't do it.
With the current
bills and all that.
With the current tax net that has been spread, sir, I think it's very difficult if anybody wants to evade. Also, it's impossible right now to spend even a single rupee without getting tracked somehow, one way or other. So it's better to have everything in billed and recorded. So, Madan sir, your thought about what Manu sir told about upgradation.
I would agree 100% because see, to give you a very, very recent example, yesterday I was visiting another center where we were discussing a lot of things, and among that, something came up where we'll have to upgrade and all. And I told, see, with my particular equipment that I'm using right now, I don't have any pain points. So if I do have a pain point, then it is worth thinking, okay, how do I get rid of that pain point, or how do I go for another equipment which does not give me that particular reason for pain. But when everything is working well, as sir said, why fix something that's not broken? So I would not upgrade just for the sake of doing it. I would rather
Absolutely
invest
correct.
that money in
Absolutely
some
correct.
other revenue. I
Yeah.
rather invest that money in some other revenue. Even as I was saying, I would not go for the top end equipment at all.
Yeah.
Go for the basic ones, and
So
just for the sake of the stock, because we might be having beginners who've just come out of an institute, and they might be a little dicey, may not be confident taking up cases because they don't have the equipment. Fine, that's why I put up the top end equipment. But I would say any Indian equipment just works as good as any other equipment. I had a talk in last year's VRSI also
yeah.
regarding Indian equipment versus foreign equipment. I spoke for the Indian ones, where we can do absolutely anything with our own machines, having a lot of peace.
Yeah, I think I heard your argument in your pavilion at Mumbai also about this owning upper machines and doing fantastically well with them. So thank you, sir, for that. And to coming to Prakhar sir and what Manoj sir told about endowment plans, actually I also agree with Manoj sir, unfortunately or fortunately, that I also only have term insurance, and rest everything I just put into SIP and mutual fund. And but there are yes, Manoj sir, please.
Okay. Since on just want to comment on this. I don't have life insurance. I don't need it. Okay. So I have practically no life insurance at all in whatever way. But if you need one, then probably you need to have term insurance. Okay. Considering some of the panelists here, if you got decent assets or something, then we don't need life insurance. Okay. The fundamentals of life insurance is that your dependent people should be able to live the way they're living currently when you are not there. So if you got enough assets or you have no dependents, you don't need life insurance. So I don't have life insurance. But if you
Yes,
still
sir.
want it, then please take term insurance only.
Yes, sir. But sir, recently I have met multiple people. Actually, most of them are coincidentally from Bania community, as Prakash sir told.
Even I am.
Yes, sir. But you are having this aversion for you are averse towards the endowment plan. But most of them, they have endowment plan, and they were telling me there are certain benefits and all. So I think, Rohit sir, we need to have a proper discussion on this. Different type of insurances, and what are the benefits of endowment plans, sir? Because Manoj sir, whatever said and done, we need to hear the other side also, why they are choosing endowment plan and what benefit they think they are getting, so we can have detailed discussion, and then the audience can choose what they want. So some days
I
we
agree
Prakash
with
sir,
you, Nilesh. Yeah.
yeah.
Sorry to interrupt. Just one more point. From this financial year, the presumptive tax amount for doctors have been increased from 50 lakhs to 75 lakhs. And another thing is, if I'm not wrong, I would really request you guys to discuss with your CA. Not more than 10% of your income you can show in direct cash in that.
Yeah.
So that one caveat has been added now for the presumptive tax. And uh, what Prakhar was probably showing the importance of presumptive tax, because a lot of our colleagues do not know about presumptive tax, and it's a very simple way of making your calculations easy. The government has made this thing so that we don't have to make accounting difficult. And about endowment plan, I believe when we invest through endowment plan, there is some GST taxation also involved. And a lot of times these endowment plans have got a lot of commission being given to the bank employees or the insurance agents.
Yeah, that's true. That commission has been given to the agents, and if you whenever you buy an endowment plan or any plan for that matter, you just settle this with your insurance agent, to give the whole commission to you, because usually they will get commission every year, but the initial commission is the most important, which is a good amount, and that you can get back. But then, yeah, like Dr. Manoj said and like Dr. Nilesh said, that a lot of people are buying endowment plan, and when I had to go for this endowment plan, I was also in two minds, and a lot of discussion happened. But the only reason I went for it was that it was giving me a decent our investment in terms of after a lock-in period of 15 years, when I am going to be strict about these payments, and 5 years of waiting period, and then getting a fixed amount of money every year from the 21st year till the end. So maybe my insurance agent explained me in that lucrative way that I got attached to it. But yes, I've asked a lot of people, talked to a lot of people, but a lot of people are buying. But yes, like Dr. Manoj said, a lot of people said this also, that when you're buying for a insurance, then term insurance, go nothing for apart from term insurance, nothing else is the best thing. Yeah, so there are people who have thoughts on both the things.
Yeah.
Prakhar, can I make a comment?
Yes, sir.
Yeah,
Yes, sir,
sure, sir.
please.
You've taken the endowment plan how many years ago?
I've just taken it 2 years back.
And have you taken Section 80C benefit on that? A Section
Yes,
80D
I have.
benefit?
Yes,
Okay.
yes, yes.
So then I'll give a simple suggestion. You pay for 5 years and then withdraw it. Because if you withdraw now, you'll have to pay the tax you
Right.
save. So pay for
Mhm.
5 years and then please stop it. One line advice. Okay.
Yeah, true. That's and if we are thinking about this financial discipline that for 15 years we store, then PPF I think will be a better option, where you have government-backed security, and then also you have you can withdraw only after 15 years. So that will be one thing, and probably we will have a talk on all kind of insurance, because we have to have indemnity insurance, and we need to have our term insurance, and then health insurance. And these three topics have been discussed in medical legal. At least in this indemnity insurance has been discussed in YOSI medical legal series as well, but that was from the medical legal point of view. But financially, how it makes sense and what are the implications, I think we need to discuss in one of our webinars now.
Definitely, we can cover insurance as a separate webinar, Nilesh.
Yeah.
Yeah. And Prakhar, you need to share your Excel sheet with everyone. You
Yeah.
have made something nice. Now it's a duty to share it with everyone. Yeah. You can even send it to Nilesh. He can send an email to all UCs.
Yeah, that can be
And
done. That will be very good.
yeah, I just teams approach you to buy a percentage of your practice or the whole practice. They look at simply the overall revenue. They are not paying for the equipment we have. Even if you have LASIK, Femto or anything, they're just going to look at the EBITDA. So that is, so generally equipments wouldn't get us a fancier pricing later.
Yeah. True that, sir. And one more suggestion, I think, for the next webinar should be the financing of instruments, because there are multiple options right now, and that also is one of those things that we need to discuss.
Absolutely.
Dr. Gopal Damani sir had two comments to make. I think one Rohit sir replied also in the chat that the presumptive tax, that cash has to be in 5% and not 10%. And Prakash sir, he is requesting for the Excel sheet.
Yes, I'll definitely share it. I will make it in a way that everyone can be helpful,
Yeah,
just by removing same things, and then I will post it. It'll be, yeah, I'll definitely do it.
thank you, sir. Thank you so much for that. So, any parting, sir, last thoughts from the speakers panelists? Madan sir.
I think it's nothing else. I think it's fair enough. I think good enough.
Yes, sir.
Okay.
Thank you so much.
Yeah.
Thank you so much, sir.
Thank you.
So,
Thank you.
so we will stop the meeting now, and hopefully we will meet next month with more topics. And everybody who wants to join as a speaker or as a panelist, or just want to have a discussion, part of discussion, please email it to either secretariat@yosi.in or yosisociocultural@gmail.com. So we will be happy to take your feedback also, and to have you as a part of our panel and speakers as well. So thank you so much for that.
Thank you. Thank you.
Thank you. Good
Thank you,
night,
everyone.
everyone.
Nilesh, thanks, Dr. Rohit. Thanks, Dr.
Good night, sir. Bye, sir.